the gold market relative to other things is a relatively small market. So in terms of what's available to be sold at a certain price, because the central banks aren't going to be selling their gold at any price. So it could go quite a long way. If this plan by Besant to monetize gold goes ahead, and when I say monetize, what that means is they would revalue gold from the official price of $42.22 to perhaps the market price, or let's call it $3,000 or $3,500 maybe, which is higher than the market price. What that would do would put a new floor under the gold price.
Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
What's happening, therefore, is that people are saying, if I can lay my hands on the right size bars, I can buy the spot bars, sell the future, and make a contango, or make an interest rate return, which is far higher than I can get on any other asset, and there is zero risk, because I own the gold. When it gets to spot month, I can deliver the gold. Zero risk. So the question is, how high can it go? Well, I think you never know. The music carries on until it stops. But right now we have a clear situation that there are net buyers of gold out there. And I think this is now starting to draw in, to a small extent, asset allocators from the big banks and investment managers who are starting to say, I've had a really good run with my Mag 7, with my S&P 500. Is it time to take a little bit of money off the table and go into the next big thing? And I think that some of them are starting to allocate 1 or 2 or 3% to the gold market. And that, I think, is also, it's still very, very early. There's no evidence that that's happening yet, because we don't see large inflows into the gold ETFs. But I think it's starting to happen a little bit. They're picking up gold a bit left, right, and centre. And it's probably more in Europe than it is in America. But people are starting to buy that gold. And I think it could, down the line, turn into quite a rush. So we might see a huge speculative move upwards in the price of gold. So how can it go? Well, Daniel, I don't know. I mean, you can put any number under the sun. You know, things can go to extreme levels when people get excited about something. The gold market, relative to other things, is a relatively small market. So in terms of what's available to be sold at a certain price, because the central banks aren't going to be selling their gold at any price. So it could go quite a long way. If this plan by Besant to monetize gold goes ahead, and when I say monetize, what that means is they would revalue gold from the official price of $42.22 to perhaps the market price, or let's call it $3,000 or $3,500 maybe, which is higher than the market price. What that would do would put a new floor under the gold price. So let's just say, for illustration purposes, the government decides to do that, and I'll tell you why they'll do it in a second. They revalue gold at a new official price of $3,500. What does that do? It puts a floor under the gold price, because the government is now standing ready to buy unlimited amounts of gold at $3,500. So you have no risk whatsoever if you buy gold when they've made that the official price, because they will buy unlimited amounts of gold at the official price. Of course, they won't sell you any at the official price. The question is, why would they put a new price on gold, a new official price? Well, the reason is, if you change the price of gold from the $42.22 that it's on the books at the moment to the market value, they are going to book a very large profit. So if they put it to, let's say, 2,900, where gold is roughly now, then that's about $800 billion of profit, which, by calling it a profit, they can say that the budget deficit for the current year, at least, has been reduced. So if they were to do this, the higher the gold price, the better. Because the higher the gold price is, the more profit they're going to make, and the more they can say they've reduced the budget deficit. Now, it doesn't actually change anything about, as far as the amount the government actually has to borrow, but it does make the official figures look much better than they really are. And of course, then President Trump, can stand up and say, look, I've only been president for a year or 2 years, whatever it is. And look, the deficit's down from 2 trillion to $500 billion or 1 trillion, whatever the figure will be.
India and China, two of the world's largest economies, are rapidly increasing their gold holdings while reducing their exposure to U.S. Treasury bonds. This strategic move signals a broader shift away from reliance on the US dollar, fueling concerns over de-dollarization and its potential impact on global financial stability. According to a recent report by the Kobayashi Letter, both nations have been actively diversifying their reserves, steadily reducing their dollar-based assets. India's gold reserves have tripled over the last decade, now valued at $70.9 billion. Meanwhile, China has aggressively expanded its gold holdings to $73.5 billion, marking a significant pivot toward the precious metal. Clive Thompson notes that central banks worldwide, particularly those less aligned with U.S. interests, are increasing their gold reserves. This trend is largely driven by concerns over the weaponization of the U.S. dollar, the risk that foreign-held U.S. assets could be frozen at a moment's notice. Holding physical gold domestically ensures financial sovereignty, allowing nations to trade freely without exposure to geopolitical restrictions. Let's get back to the interview.
Almost all of those central banks who are buying gold were not the best friends of the United States. So why is this happening? I think the weaponization of the US dollar has caused a lot of countries around the world to rethink the ratio between gold they hold and US dollars they hold. Because if you happen to hold dollars or treasuries, they can be frozen with a flick of a switch. Whereas if you hold gold physically, and you've got it in your home country, you can move it around to pay for your goods and services if the push comes to the shove. So I think that there's a tendency from central banks, and I think does include China, and that's why I'm thinking that could be them, to say, let's reduce our exposure to treasuries in favour of gold. And we can see that happened last year. In 2024, 85% of the increase of China's reserves was attributable to gold for two reasons. First of all, net gold purchases, and secondly, the general rise in the gold price. So despite the gold price being at an all-time record, China continued to buy, even though it meant that almost all the new reserves they were getting was going into gold. So very little appetite from China to invest into US treasuries. There's no evidence that I've seen that the retail investors anywhere are getting involved in the gold market. I think they are to some extent in China, but I think that's been a bit up and down. So right now I'd say it's down because the Chinese are showing a little bit, the private investors in China are showing a little bit of reluctance to pay the highest prices ever. But they were quite heavy buyers a few months ago. Shanghai gold was trading at a premium to New York gold. Now it's pretty much on a level. And the reason why Chinese investors are interested in gold is traditionally, the way you save in China was through real estate. You buy a second apartment, a third apartment, a fourth apartment, and that was the way of saving. But suddenly, all these apartments can't be sold, they're all empty, and the banks you still have to pay the interest on the loans you've taken out to buy these apartments. So the real estate market, residential real estate market, has collapsed. And nobody is buying apartments anymore as a way of saving because there's no reason for them to go up when those apartments are actually empty and the population is forecast to fall. So what's going on? They're looking for other things to buy. Now, they could go to the stock market, but the stock market isn't exactly booming at the moment with it has had a little bit of a jump in the last week or two, but it's not really booming because some of the largest companies in China have been somewhat wrapped over the knuckles for becoming too powerful and kind of been taken down a bit. So the stock market is pretty much in a recession. So they're looking around for other places to go. And of course, the one way you can invest in China is either if you join up with the Shanghai Gold Exchange as a private investor, which you're allowed to do, and I think there's millions of people who've done that, you can buy gold there, or the more common way to buy it in China is to walk into a jewelry shop where you can buy lots of gold items which are priced according to the price of gold per gram. So all you pay is the gold price plus the tax plus what's called a labor charge. So every item in the store has got its weight and the labor charge. So you look at the weight, you multiply the weight by the price on the wall, which is the price per gram of gold, add the labor charge, and that's what you pay. So you know exactly, when you're in a Chinese gold shop, you know exactly how much gold you're getting for your money, and you know that if you sell it back, you won't recuperate the labor charge, or the taxes for that matter, but at least you know what the tangible value of the item you're buying is. I think that's a very nice way, and it's a very open way to sell gold, unlike what we have in the West, where you walk into a jewelry shop and they've got all their gold items, but you have no clue unless you have a pair of scales, you're quite smart and can work it out. But you've got no clue as to what the value of the gold in the item you're buying is in the West. But in China, they know exactly what it is. So it's become a way of saving for the Chinese people to invest in gold. And it's not everybody, it's a very small percentage, but that's enough to drive a flow of gold into China at the moment.